Hello everyone. Today we are going to discuss about Form 2106, Employee Business Expenses. Form 2106 is used by employees to deduct ordinary and necessary expenses related to their jobs. This form is used by armed forces, reservists, qualified performing artists, fee-based state or local government officials, and employees with impairment-related work expenses. In another word, Form 2106, Employee Business Expenses is a tax form distributed by the IRS used by the employee to deduct ordinary and necessary expenses related to their jobs. Ordinary expenses are generally considered common and accepted in a particular line of business, while necessary expenses are those that are helpful in conducting business. Starting in the year 2018, unreimbursed employee business expenses could no longer be claimed as tax deduction for the majority of expenses. Currently, the only people who can use Form 2106 are armed forces reservists, qualified performing artists, fee-based state and local government officials, and employees with impairment-related work expenses. Prior to 2018, any employee with unreimbursed work expenses could use Form 2106 to claim those expenses as a miscellaneous itemized deduction. There was another form version of Form 2106 EZ. Unreimbursed employee business expenses was a simplified version and was used by employees claiming a tax deduction because of unreimbursed expenses related to their jobs. This form was discontinued after 2018 after the Tax Cuts and Jobs Act went into effect. Who can file 2106 employee business expenses? According to IRS, only the following taxpayers can use the Form 2106: Armed Forces Reservists, qualified performing artists, fee-based state or local government officials, employees with impairment-related work expenses. Prior to 2018, any employee with unreimbursed work expenses could use the Form 2106 to claim their expenses as miscellaneous itemized deduction. How to file Form 2106, Employee Business Expenses. There are two parts of the form. Part 1, you can see, this is part 1 and the part 2. Part 1 tabulates all employee business expenses and reimbursements. This part then calculates whether and which expenses are eligible for a tax deduction. This includes vehicle expenses, parking, toll, transportation charges, other business expenses. The filer also includes any reimbursement made by the employer. Part 2 deals more specifically with vehicle expenses. Filers have two choices. They can use the standard mileage rate, which means multiplying the IRS mileage for tax year by the number of business qualifying miles driven. The mileage rate be factored in gasoline and repair expenses plus wear and tear on the average car. For 2021, it is set at 56% cents per mile, down from 57.5 cents in 2020. The second method is to calculate actual expenses. This includes gasoline, oil, repair, insurance, registration and depreciation, which is with the use of the table in the instructions. You can see the instructions as well, which is available on IRS website. You are not able to deduct interest on car loans. There are also limits on car valuation, whether you use standard mileage on or actual expenses incurred commuting to or from work are not considered eligible business expenses. So guys, part 1 is about your business expenses and reimbursement. I have already discussed. And part 2 about vehicle expenses like gasoline, oil, repair, vehicle insurance, vehicle rental, inclusions. So let's have a look in our software break. You can see the Form 2106 in our software break. So you just have to provide the details to generate form. So there are please read before proceeding. Before beginning in 2018, use this form only for the employees who are qualified performing artists, fee-based state or local government officials, employees with impairment-related work expenses or armed forces, reservists. For employees who do not fit into one of these listed categories, complete this screen only if it is needed on a state return. So please read this line and understand the meaning of the words and then proceed with this form. So here these are the options like qualified performing artist, fee-based state or local government officials, impairment-related work expenses, armed forces reservists, and vehicle expenses adjustments, parking, tolls and transportations, meals. Now control V. You can see form 2106 is flowing here in our return, employee business expenses. You can provide all the other expenses if you have the information on those expenses. In column A, the amount is flowing $5,000 and column B for meals. Other than meals in column A and meals for particularly in column B. It is taking 50% of the meals comes to $200. Now total amount comes to $5,200. Schedule 1. Yes, you can see this. Certain business expenses on reservists, performing artists, fee basis, government of the attached form 2106. So total adjustment income comes to $5,200 from 2106 form. So this is how it works. This is how adjusted your income. Prior to 2018, as we have already did, that it used as itemized deduction. So before concluding our video, I am just quickly going through what I have discussed about Form 2106. So basically Form 2106 is used by the employees to deduct ordinary and necessary expenses related to their jobs. This form is used by armed forces, reservists, qualified performing artists, fee basis, state or local government officials, and employees with the impairment-related work experiences. In another word, 2106 employee business expenses is the tax fund distributed by the IRS used by the employees to deduct ordinary and necessary expenses related to their jobs. Ordinary expenses are generally considered common, accepted in a particular line of business, while necessary expenses are those that are helpful in conducting business. Starting in the 2018, unreimbursed employee business expenses could no longer be claimed as tax deduction for the majority of the taxpayer. Currently, the only people who can use the form are armed force reservists, qualified performing activists, local government officials, employees with impairment-related work expenses. Prior to 2018, any employee with the unreimbursed work expenses could use the Form 2106 to claim their expenses as miscellaneous itemized deduction. Who can file? I have already discussed. So how to file? Right, there are two parts of the Form 2106. Part 1 about tabulates the all employee business expenses and reimbursement. This part then calculates whether and which expenses were eligible for tax deduction. These include vehicle expenses, parking, toll, transportation charges, and other business expenses. The filer also includes any reimbursement made by the employer. Part 2 deals more specifically with vehicle expenses. Filers have two choices. They can use the mileage standard the standard mileage rate, and which means multiplying the IRS mileage for the tax year by the number of the business qualifying miles driven. The mileage rate factors in gasoline, repair expenses plus wear and tear on the average car. For 2021, it is set to 56 cents per mile, down to 57.5 cents in 2020. And the second method is to calculate actual expenses. These include gasoline, oil, repair, insurance, registration, and depreciation, which is factored with the use of a table of instruction. This table is available. This instruction table is available on the wireless website. Please go through it. If you want to calculate, use the second method, and you are not able to deduct interest on car loans as well. There are also limits on car evaluation process. Whether you use standard mileage or actual expenses incurred commuting to or from work are not considered eligible business expenses. So guys, this is all about from 2106. I believe you have understood. Good.